The golden question is, when should anybody start receiving retirement benefits, right? Could it be your full retirement age? Could it be your uh, latest retirement age, as late as age 70 or somewhere in between, or as early as age 62? Of course, there's no one size fits all answer, and it's going to depend on a number of factors. Marriage status, or whether you're concerned about longevity or your current income, or even concerns about the solvency of Social Security, or just simply because you need and would appreciate that money sooner than later, even if it may be less than what you could get if you wait. And so it's a difficult question to answer at times, but knowing the rules can make a big difference, the process and what your options are. But knowing that up front is going to matter, because once you start, with barring a small exception, you're locked in. There's no changing it. You know, there are some exceptions where after a brief while you can still cancel it and pay back what you've received. And we can get to that. But ultimately, really, it is a once and done decision for you. And that can also influence whether a spouse can file for their own benefits or spousal benefits. So there's a lot of questions and things that circulate when this topic comes up. And it's not always easy to find a good answer or even get through to Social Security Administration. You may, or get an appointment, and still, it might not be the best advice for you. And so, again, understanding how it works, using the resources available, applying them to your specific situation, talking to Social Security Administration or a financial planner or even a CPA can give you more information to make an informed decision. But again, timing, there is no one perfect time for everybody. So back to the basic things to consider. What is your full retirement age and benefit calculation? That's kind of your benchmark number. We'll take a look at that. What is the amount of your future benefit and the effect of early or delayed retirement? How long do you expect retirement to last based on life expectancy? That's a tough one. Your health factors in, your genetics may factor in. When do you plan to keep working even past full retirement age, which for most people is now age 67? That could get pushed higher down the road. How does that impact you? Are there other sources of retirement income that may allow you to delay Social Security and maybe get a higher benefit? And also can affect how Social Security is taxed. And there it is, income taxes. Social Security gets some special tax treatment, but it's only one factor. And as we mentioned, how is your spouse possibly affected, since one spouse cannot claim benefits on, say, the working spouse, or the one who has the higher benefit, until that working spouse has filed for their own benefits. There are sometimes small exceptions, but we'll take a look at those too. So first, knowing what your full retirement age is key, and that's going to depend on, of course, when you were born, and it can even be an age and a certain number of months. But for those born 1960 and later, then there's just a blanket age 67. That is the latest full retirement age. And we'll see what Congress decides to do to extend that or start adding partial months or partial years to that. And then how is it calculated? Typically, it's going to be your highest 35 years of earnings indexed for inflation, and then averaged. So then they have a formula that's basically accomplishes that and determines your benefit at that full retirement age, which is called the primary insurance amount, or PIA. So if you retire at full retirement age, you'll receive 100% of your full retirement amount, or PIA. But if you begin receiving your retirement benefit earlier, your benefit will be reduced by a certain percentage for each month that you receive benefits early. But remember also that to qualify for Social Security retirement benefits in the first place, you have to have worked at least 10 years in Social Security covered employment. Not everybody has a Social Security covered job. So having done at least some work, that's kind of the general understanding. And that can be based on earnings as well. So how much you'll receive can start as early as age 62, and you can see an example of the reduction of benefits compared to, say, your full retirement age being 67. In fact, if you take it at 62, it will be 30% less than it would be at age 67. So it's simple math, but doing any time in between requires a little bit more math. And you'll receive your benefits longer for a longer period of time, that is, if you begin receiving benefits at your full retirement age, and that's certainly a big factor. But first, let's look at how your benefit will be affected if you decide to delay retirement instead. So you can actually do this up until age 70, delay receiving your benefit. They're called delayed retirement credits, equal to 8% increases for each year that you postpone receiving your benefits past the full retirement age. And that's based on your own earnings record. You won't receive delayed retirement credits for survivor benefits or spousal benefits. And to continue with the hypothetical example from the previous slide, if your full retirement age is 67 and you decide to delay receiving benefits until age 70, your benefit at age 70 will be 24% more than at age 67. So as this chart shows, a $2,000 monthly benefit taken at age 67 will be worth $2,480 if taken at age 70 instead of at age 67. So this final chart shows the range of monthly benefits you might receive depending on when you choose to begin receiving benefits. In the hypothetical example here, if $2,000 is the full retirement benefit at age 67, the monthly benefit of $2,480 at age 70 is approximately 77% more than the monthly benefit of $1,400 taken at age 62. So definitely a big increase there. But what this chart doesn't show is that you'll receive benefits for 8 years longer if you claim that at age 62 rather than at age 70. And that too can add up to a lot of money. So in this example, if you receive a $1,400 benefit for 8 years, you would have received $134,400 by age 70. And that's not including any cost of living adjustments. So that takes us back to the fundamental question. Is it better to opt for a smaller monthly benefit at age 62, but receive it for a longer period of time? Or is it better to claim at age 70 to receive the highest monthly benefit possible? And again, there's no one size fits all answer. In part, it depends on how long you can afford to delay receiving benefits and how long you can expect retirement to last. So there is a break-even point, to where if you wait till 70, how long does it take to break even to receive as much as you would have received had you started at 62 and then surpass that? Calculators can help you get there, but it's typically going to be 7 or 8 years, and assuming that you live long enough to get there. So again, how long will retirement last? No way to know for sure, but it may last longer than you think. According to Social Security Administration, about 1 in 3 65-year-olds today will live until at least age 90, with 1 in 7 living until at least age 95. You may even want to plan for this maximum lifespan to reduce the risk that you'll live longer than you expect and simply run out. So, for example, if you wait a few years to claim benefits, you'll receive a higher monthly benefit for life. And remember, because you'll receive annual cost of living adjustments if prices rise, your benefit will generally keep pace with inflation, unlike most other sources of retirement income. And if you're married, you'll need to consider the joint life expectancies of you and your spouse, which will often differ from your individual life expectancies. But do you plan to continue working? If you're thinking of working well into your 60s and 70s to increase your retirement savings, you may be wondering whether you can receive your Social Security benefits while you continue to work. And the basic answer is yes. Many people choose to apply for Social Security benefits before they actually retire. But as you may have heard, earnings from work may affect your Social Security benefit if you're under full retirement age. So if you're under full retirement age and your earnings exceed a certain amount, called the annual earnings limit, part of your benefit will be withheld, reducing the amount you receive from Social Security. But once you reach your full retirement age, you can work and collect full Social Security benefits. Earnings from a job won't affect your benefit at all. So take a closer look. If you're under full retirement age, the rule is that $1 in benefits will be withheld for every $2 you earn over the annual earnings limit. This limit generally changes every year. In 2025, the limit is $23,400. In the year you reach full retirement age, a special rule applies. $1 in benefits will be withheld for every $3 you earn over the annual earnings limit. So in 2025, the limit is $62,162. Again, that's the first year that you reach full retirement age. And as mentioned earlier, at or after the full retirement age year, earnings will not affect your benefit. But to clear up a common misconception, you're not actually losing your benefits because you choose to work. So you don't need to try to limit your earnings. If some of your benefits are withheld, you'll receive a higher monthly benefit at full retirement age because the Social Security Administration will recalculate your benefit every year and give you credit for any of those earnings that are withheld. So the effect working will have on your benefits is only temporary, and any additional earnings you may actually have earned may also increase your benefit later. And the Social Security Administration website, they have a tool called the Retirement Earnings Test Calculator that you can use to see how earnings before retirement age might affect your benefit, at least temporarily. How are we doing? Questions? Everything's still showing up on your end? Okay, so one of the most important factors to consider as you decide when to begin receiving Social Security benefits is how your decision will affect your overall retirement income plan. Most people have several sources of retirement income, including Social Security benefits, income from savings and investments, earnings from a job, pension benefits, maybe a business, rental income, you name it. Now, how much retirement income do you need, and how does Social Security fit into that plan? If you have less than adequate retirement savings or no pension, you may need to rely more heavily on your Social Security income, leading you to claim benefits early if you need retirement income as soon as possible, or conversely, encouraging you to postpone claiming benefits so that you can earn the highest benefit possible. But if you've been able to accumulate substantial retirement assets, you may have more flexibility when it comes to timing your Social Security benefits. So, for example, it's possible that claiming your Social Security benefits sooner rather than later will allow you to delay withdrawing funds from tax advantage investments such as 401ks, 403bs, traditional IRAs, allowing them to accumulate tax deferred a bit longer. Alternatively, tapping other retirement assets first may allow you to postpone claiming your Social Security benefits, thereby allowing you to accrue delayed retirement credits. So I have some clients that we've run the scenarios and the calculations and found out that actually it was better that they started their benefits before full retirement age, even as early as 62, because they had savings or they had a spouse that was already claiming benefits and it was enough. And so it made more sense to wait. But then another question comes up, is your benefit going to be taxable? That may or may not matter much, depending on what income you have in addition to your Social Security benefit. And taxes aren't going to be a big concern for everyone. If you have little or no income other than Social Security, then your Social Security income probably won't be taxable at all. But if you have income from sources other than Social Security, you may end up having to pay federal income taxes on your benefits. In fact, it's almost certain. If you show on the chart or see on the chart, a portion of your Social Security benefit may be taxable depending on your combined income from Social Security and other sources and your tax filing status. So for example, let's say you're single and collect a Social Security benefit of $30,000 per year and have $25,000 in earnings from a job. Up to 85% of your benefit may be taxable because your adjusted gross income plus one half of your Social Security income is greater than $34,000 per year. The important part to remember is that when you're making your decision about when to begin receiving your Social Security benefits, federal and in some cases state income taxes may be a consideration if you have substantial taxable income, such as earned income or taxable pension income or investment income. And then how will your decision affect your spouse? If you're married, there's another important question you'll need to ask before you decide when to claim benefits. How will that affect the spouse? That's because when you begin receiving your retirement benefit, that timing can dramatically affect your spouse's benefit during retirement and therefore your overall household income. And your decision can also affect any survivor benefits your spouse may be entitled to. Your spouse has decisions to make too. So together you'll need to consider what the most appropriate combination of claiming ages is based on your ages, earnings, and life expectancies. Other people, such as your dependent children or a former spouse, may also be eligible for benefits based on your earnings records. But the rules are a bit different, and it's not like they're reducing your benefit, but they may be eligible based on a calculation that's based on your own benefits. So that's not really covered in this presentation. That's a whole different topic, but just let you know that that is there. And when you're married and both you and your spouse have worked in jobs covered by Social Security, each of you may be entitled to retirement benefits based on your own earnings records. And as you recall, at your full retirement age, you're entitled to receive 100% of your full retirement benefit. And you can receive reduced benefits as early as age 62. I see a hand up.
Tim, this is Rajiv. We need to go to the airport to drop Tara. She's heading out to Austin, Texas. So I just wanted to let you know that before we leave. So just want to say thank you very much. And I'm hoping to have a meeting with you fairly soon to discuss our plans moving forward.
Well, all right. Thanks, Rajiv. If you guys are signing off now, best wishes to you. Safe travels. You can get the survey and request a recording to see the rest of this and all the other usual supplements.
Sounds good. All right. Thank you.
Take care. You're welcome.
Okay, bye-bye.
So I think that just leaves you, Don.
Yeah, I'm still here.
The Lone Ranger. All right.
Well, I'm already getting benefits and can't go back and change anything.
Right, right. That's okay. This might be knowledge that you can impart to friends and family. So it's good to understand how it works, even while you're on the benefit.
So, yeah, that's what I like is that this is just a good way to see if we made right decisions along the way. It looks to me like we did. So,
Yeah, you don't want to live in remorse.
so
All right, well, let's continue. There's about 6 more slides to go.
okay.
So as you recall, at your full retirement age, you're entitled to receive 100% of your full retirement benefit, and you can receive reduced benefits as early as age 62. So you or your spouse may also be entitled to spousal benefits. For example, if your spouse has had low lifetime earnings, he or she may be entitled to a spousal benefit based on your earnings record that is larger than a retirement benefit based on his or her own record. At your spouse's full retirement age, this spousal benefit will generally equal 50% of your full retirement benefit. But that amount will be reduced if your spouse files early. For example, if your spouse's full retirement age is 67 and he or she files at 62, your spouse will receive only 35% of your full retirement benefit. And this reduction is permanent, so it's important to carefully consider the implications of filing early. And keep in mind that your spouse can't collect spousal benefits until you have filed for your own retirement benefit. And in addition to retirement benefits and spousal benefits, married couples must consider survivor benefits. When you claim your Social Security benefit, it can greatly affect the amount of income available to your spouse should you die, because your surviving spouse will generally receive the benefit that you are receiving at the time of your death, unless your spouse is already receiving a higher benefit based on his or her own earnings record. If your spouse's life expectancy is much longer than yours, this can be an especially important consideration. So survivor benefits may be payable as early as age 60, but a benefit reduction will apply if the surviving spouse begins collecting a survivor benefit between age 60 and his or her full retirement age. And one of the nice things is to know is that, say the higher earner waits to 70 to get the very highest benefit they can, and then they die, well, then the surviving spouse can actually step up to that full age 70 benefit, but they drop their own. So that timing can be a big thing. And why a number of my clients choose to wait so that that surviving spouse can step up to the highest single benefit. All right, so here's a hypothetical example that illustrates why it's important for spouses to carefully choose when to begin receiving Social Security retirement benefits. In this example, both spouses are able to claim benefits based on their own records. Spousal benefits are not considered. In this table, if both spouses choose to claim benefits at age 62, their joint monthly income will be $3,077. But if both spouses wait until age 70, their joint monthly income will increase to $5,451, a difference of $2,374 per month. That's over $28,000 per year. In addition, by waiting longer to claim retirement benefits, spouse 1 may also substantially increase spouse 2's monthly survivor benefit. Since Social Security generally pays the surviving spouse the larger of his or her own retirement benefit or the benefit his or her spouse had been receiving. Of course, this illustration does not account for the other factors that this hypothetical couple might need to consider, and your own situation and overall income plan can be unique. One strategy some people might consider in certain situations is the do-over or reset. This might be appropriate if you filed for early Social Security benefits before reaching full retirement age and regret taking a permanently reduced benefit. It also has the potential to benefit your surviving spouse, who might be eligible to claim a survivor benefit based on a higher amount. So you're allowed to take this action only once in your lifetime, and the application to withdraw benefits must occur within 12 months of the time you made your original claim for retirement benefits. And you must repay all the Social Security benefits you and your family have received up to that point. Fortunately, at least, you don't have to pay any interest. So to reset your benefit, you'll have to fill out that Social Security Form 521, which is the request for withdrawal of application, noting the reason why you want to withdraw the application to benefits on the form. The Social Security Administration will respond to your request and notify you of the amount of benefits that need to be repaid. And you have only 60 days to cancel an approved withdrawal. So once this process has been approved and completed, you'll be able to reapply for Social Security benefits at a future date. If you wait until your full retirement age to reapply, you would receive your full benefit amount. And if you wait until age 70, you could receive your maximum benefit. All right, so starting to sum up, the choice is yours. This presentation has explored some of the major questions that you'll want to consider as you decide when to begin receiving Social Security benefits. So to summarize, here are some of the reasons you may decide to claim benefits earlier, as well as some of the reasons why you might decide to claim benefits later. And again, it's up to you, based on your own unique needs and circumstances. Retirement can be exciting, but it comes with financial challenges. And when you're ready to make decisions about your Social Security, it can take time to explore your options. All right, and so to finalize, ultimately, when there's the biggest questions, you can contact the Social Security Administration to get their official say on things. It may not always be the best advice, but at least they should give you accurate answers to your questions based on their rules, which are fairly frequently misunderstood. And unfortunately, there's so many of them because there's been so many caveats, exceptions, abuses, where they've had to make new rules and so forth. And they'll continue to change over time. And so you can also get an official estimate, which typically you get online. And you can view a summary of your actual earnings record and an estimate of your retirement benefits based on up to 9 different claiming ages, including age 62, full retirement age, and age 70. If you're already 60, you have the option of receiving this statement in the mail every year, about 3 months before your birthday. The second way to estimate your Social Security benefit is to use the Social Security Administration's retirement estimator, which is also available at the website. This calculator allows you to input various scenarios based on current law to estimate your future benefits. And as you age near age 62, you should also contact the Social Security Administration to discuss your options. Representatives are not allowed to give you advice about when to start your benefits, but they will be happy to explain your options and the rules that apply. And when it comes time to apply for Social Security benefits, you can do that online, by phone, or in person. All right, so we've reached the end. Thank you for joining. And